Our next guest says that Indian markets are on a solid footing. Alder Capital investment manager Rakhi Prasad now joins us. Rakhi, why do you say that? And give us a sense of what you've been gleaning from this earnings season right now, which perhaps may well solidify that view.
Absolutely. I believe the Indian markets, Indian economy has actually crossed its pre-COVID levels this quarter. We're seeing it across sectors, especially in the discretionary businesses, small and mid-cap businesses across apparels, retail, footwear. Also, we are seeing businesses, BFSI, doing exceedingly well. Export businesses will be a little bit under pressure, but overall, I think domestically businesses are coming back and raring to go.
So tell me, Rakhi, when you look at the corporates there, what's the forward guidance like? And are they having any impact from the higher cost of borrowing instituted by the Reserve Bank? Of course, 50 basis points was the last move for them. And also, you know, ultimately, where do you see rates going and how will it affect corporates and then, therefore, your investment ideas?
So inflation obviously seeped through this quarter, which we predicted last 4 or 5 months ago. That will continue to seep through even in Q2. That's what commentary is, what we're hearing from various types of corporates across FMCG, etc. With the rate hike, RBI obviously has brought it back above the pre-COVID levels, and that will start to impact a little bit on the housing sector, etc. But remember, I mean, these rates are still below the high inflation and high interest rates we had seen during 2009 to 2014 period. So in that sense, demand is still there in the housing sector, which will pick up and maybe at a slower pace.
The thing is, Rakhi, you got to wonder how much upside there is for Indian stocks, because if you take a look at valuation indicators, they're pretty much closing into peak valuation.
You're absolutely right, Haslinda, and that's one of the indicators are money indicators in terms of valuation indicators, whether it's earnings yield to bond yield, market cap to GDP, your PE, they're all trading slightly above what we would consider as comfortable. So maybe it's a pause in the market, maybe considering that if there are no risks that we see, either geopolitical risks in terms of supply chain disruptions or oil going back to, you know, crossing $100, $120, we may actually see some correction. But for the time being, I think everyone is happy.
How would you cut risk in your portfolio? How are you tweaking? How should you tweak?
Absolutely. So that's something that we are also looking into and deep diving into our stocks in our portfolio, seeing whichever ones are at a higher risk or have exceeded valuations beyond comfort levels where our IRRs are not interesting anymore. We're trimming those positions, putting it in positions where we are seeing long-term IRRs. So it is one of those adjustments that we're doing at this period of time, and that's how we're seeing the markets.
Rakhi, what about the industry groups that you totally avoid and the ones that you like right now in light of what we've seen so far and getting back to that earnings season?
So rural as a sector is something that we're being cautious about just because of all the commentary that we've heard across various sectors and companies where rural wages have not picked up. Rural demand is sluggish. You can see that in the high frequency indicators, whether it's two-wheelers, whether it's mass consumption items, whether it's FMCG where people are down trading. So in that sense, rural is a space that we are avoiding at the moment. Obviously, with global economic pressures and the slowing down of the US and European markets, export businesses is also an area that one needs to be concerned about. But from a domestic point of view, there are a lot of opportunities, whether it's in healthcare, whether it's in small discretionary businesses that actually have pricing power, and larger businesses that can take advantage of the economic volatility that is happening.